the moment, the bottom line number probably doesn't tell you the full picture. There's still quite a bit of accounting noise in the results. And then also, obviously, there's restructuring costs that UBS continues to incur to deliver the large-scale integration of Credit Suisse. So I think, the devil will be in the detail. I think what I also saw there, which is definitely a positive, is that they continue to book net client inflows. I think, initially there was concern from the market that the integration of Credit Suisse into UBS would lead to client outflows from the key wealth management division. So, I think that's definitely a positive. And then on the cost-to-income ratio, even on a normalized or underlying basis, pushing up slightly, I don't think that is negative. I think that is what was to be expected, because even UBS's underlying results was a little bit inflated by gains that they booked on selling some of the securities that was on Credit Suisse's balance sheet.
Yeah, they're definitely highlighting this with continued client momentum, really trying to brush off some of those concerns that you just mentioned there. But do you think, trying to understand the slight upside when it comes to cost, is this really the start of perhaps some kind of attrition when it comes to client and revenue because of the integration with Credit Suisse?
I don't think so. I think the revenue number in the previous quarter was slightly inflated. So, I don't think that is really reflective. No. And I think one kind of needs to take a step back and look what UBS is trying to achieve here. It's really all about the cost savings, trying to achieve that 13 billion of cost savings that they've targeted, while holding on to most of the revenue from the integrated Credit Suisse business.
What about this regulatory environment, higher capital requirements that is required by Swiss regulators? I mean, what is the latest on that? What kind of impact should investors be bracing for from this particular development?
Yes, I think that is probably number one concern for investors in UBS. And I think, that also makes the performance of UBS's US wealth management operations vital, because that is really the business that's probably going to drive a lot of the increased capital requirements. It seems the Swiss government really does not want UBS to be this very large global operation. And, the global operations are going to carry more costs and capital costs, and the same will go for UBS's Asian operations, and that kind of lifts the threshold for them in terms of profitability also. It remains a concern for investors, and, it will continue to possibly constrain UBS's ability to return to its level of share buybacks that it was executing before the Credit Suisse deal, So they're targeting the 1 billion of share buybacks for this year. But if you go back to prior to Credit Suisse, UBS was buying back, if memory serves, $5 billion of shares a year.